Operating in the present tense. Many years ago, I had an educational tape set with that name. At the same time, that was a common philosophy taught by Phil Jackson, who was coaching the world famous Chicago Bulls. Many of our clients trying to send me books by Jackson because of the similarity. Currently, the market is being controlled by the laggard buyers. Let's take a look at what can follow excessive buying by the laggards. The daily bar graphic in front of you shows the first example marked A, and you can see how the market rallied almost perfectly off the trend line. That kind of exactness communicates to me that these are the weakest of buyers, or what we call the laggard buyers. That laggard buying was followed by a relative substantial break. The break had 3 legs to it, but it was a pretty meaningful break. Following an excess low, the market once again, the laggards came back and once again took the market on almost a perfect trend line to the upside till it balanced. Again, that's an indication that the laggards are still active. That was followed by a break to bring the inventory into some kind of short-term balance. Following that break, the laggards took over for a third time. This time they got a little more aggressive. You got a gap higher. But notice the last several days, the market almost perfectly fits the trend line. Once again, that's an indication that we're seeing the latest activity carried out by the weakest of hands, or what we call the laggard buyers. As we come into Monday, the market is sitting right on the low of the current trend line. I'm going to apply balanced trading guidelines, or what we would call balanced trading guidelines, to the trend line. If the market remains above the trend line, the laggards remain in control, and the market has a continued chance to rally to new highs. The second scenario would see the market break below the trend line, find buyers, and return with acceptance back above the trend line, and once again, trading for new highs. More serious liquidation would see the market trade below the trend line with price acceptance and lower range extension. If the market started to break, the first support level I see is around that gap level, and I think the gap level is around the 57 or 5670 level. I'm told that at the 5750 level, a lot of market makers would start to feel the pressure. I don't know, I can't verify that. I'm told that by a professional that they would try and defend that level. If he goes through that level, they could be forced to join the party on the sell side. So the market has been very stretched out. And as you remember, we've talked so many times, it's not uncommon for markets to be forced to break before they can rally further. And all that means is that inventory got too long in the weaker hands. You have to chase out the weaker hands to have them replaced by stronger buyers before the market can continue on its way. Have a good week and focus on the trend line as Monday starts to trade. Thank you.